This is largely broad-based, the sell-off. $6 trillion now wiped off global markets this week. Jamie, here in Europe, a few sectors feeling the brunt, really. Mining stocks, for example, BHP here in London, Anglo-American, Rio Tinto, the giants of the mining world, all falling about 6% here. And that's because the slowdown in the epicenter in China means less demand for their products, obviously. But we're also seeing other impacts in the travel and leisure industry. For example, Europe's airlines and travel stocks down 18% this week, meaning it's their worst performing week since the 9/11 terror attacks, and that was back in 2001. But it's not just about what's happening in China. IAG, for example, the parent company of British Airways, came out today saying that coronavirus is going to impact the company, and crucially, they said they don't know how long the impact is going to go on for. That hasn't gone down too well with investors. Its shares down 9% today here in London. And I think the bigger concern, we're also seeing technology stocks feel some of the impact as well, because Chinese companies, obviously semiconductor operators or semiconductor makers, are impacting European technology stocks. But the bigger concern now is there might be a bit of respite at the weekend, but how long is this going to go on for once markets reopen on Monday? Is this going to continue? And that's the key question, I think, on lots of traders' minds.
Now, at times like this, we often ask about oil, because oil is perhaps a useful global barometer of where we are and where we're going. So what about oil prices?
Absolutely, not too rosier picture there either. Oil prices falling again about 3.5% on Friday. It means that it's the worst weekly performance in 4 years for oil prices. Brent crude currently around $50, just hovering above $50 a barrel. If it falls below that, that's another psychological mark for the industry that's been passed in recent months. And really, since early January, if you look at the figures, this has been a downward trend when the outbreak became more internationalized, if you will. And that's the bigger concern here. In the past, it was about the slowdown in China, but now we've had 40 other countries reporting outbreaks of coronavirus, of COVID-19, and that's the bigger worry here. As IAG said, it's not just flights to China that are affected anymore. British Airways is starting to review flights to Italy, for example, and other places as well. As for oil prices, more pressure, $50 a barrel. What that's going to mean is the meeting in Vienna next week on the 5th and 6th of March, when the big producers meet. Obviously, their coffers are going to be impacted by a lower oil price. So is there going to be more pressure for them to go even further, even deeper with their cuts, in addition to the 1.7 million barrels being wiped off markets at the moment?
Everyone's looking around the world for some sign of this stopping, or some sign of optimism. Have you found any? When's this going to stop? Well,
I think the important thing to remember with this is stock markets are volatile. This isn't bad news for everybody. Some companies, some traders are making a lot of money with stock markets all in the red like they were today. But the bigger concern for governments and central banks in particular is, will this be an economic impact? The markets are separate. Will the economy start to feel the impact? And I think that there's a lot of conversations going on at the moment where the British government, for example, planning its Cobra meeting on Monday to try and weigh up a response. According to Oxford economists there, they say that if the economic impact continues, if coronavirus becomes a global pandemic, which the World Health Organization says it isn't quite yet, that could wipe off $1 trillion off the global economy. And that's completely different to just some stock market volatility.